Welcome to today's market report.
On Friday, a global stock gauge was posted to register its largest weekly percentage gain in 4.5 months, while the 2-year US Treasury yields was set to experience its first quarterly decline in 9, following US inflation data that raised hopes the Federal Reserve may be nearing the end of its rate hiking cycle. In February, US consumer spending rose moderately, with inflation cooling, but still remaining high enough to potentially permit the Federal Reserve to raise interest rates once more this year. Additional data showed that the US consumer sentiment declined for the first time in 4 months amid concerns of a looming recession, although the recent banking crisis's impact was limited. Expectations for a 25 basis point rate hike at the Fed's May meeting dropped to about 50%, with no hike viewed as equally probable. Boston Federal Reserve President Susan Collins stated that the inflation data has yet to alter the Fed's monetary policy path, while New York Fed President John Williams said that financial conditions would be a significant factor in his decision-making regarding the central bank's interest rate policy. On Wall Street, the S&P 500 closed at its highest level since February 15th, after increasing for 3 consecutive weeks to close out the month, resulting in its second consecutive quarter gain. The Nasdaq, which has fallen for 4 consecutive quarters, increased by 16% in the first quarter. The Dow Jones rose 1.26% in the session, and the S&P gained 1.44%. The Nasdaq added 1.74%. European stocks were also higher, following news that Eurozone inflation declined by the most on record in March, although core price growth, which excludes food and energy, accelerated. The stock 600 index in Europe closed up 0.66%, while GBP USD is flat below 123, Euro-dollar is below 109. This is today's market report. Thanks for listening. We'll see you next time.